Personally, in my first 3 years of trading, I struggled so badly with my entries. It affected my self-confidence that I could no longer trust myself. I could no longer trust my analysis. And one of the main issue I had was with my time frame correlation. Yes, my time frame alignment. And I notice a lot of traders are also struggling with this. Hence why I am making this video. Hey guys, if you're new to this channel, you are most welcome because on this channel, I teach strategies on how to trade synthetic indices, even if you are a beginner. If this sounds like something that excites you, then do not forget to hit the subscribe button. So let's go straight into what we want to discuss today. Time frame combination and correlation. So when we talk about time frame, you don't necessarily have to follow the trend of having a specific time frame that you must use as the kind of trader that you have. I am an advocate of know what works for you and work with what works for you. You have to backtest this and see how well it works for you before you just put it in your trading strategy. Now, when it comes to time frame, one of the secrets you need to know about time frame is that whatever you are doing on chart has to correlate with what the higher time frame is doing. It has to be in alignment with what the higher time frame is doing. Now, if you're having issues with your entries, come close. I'm going to show you something beautiful that can change how you look at the market. So when you're picking out your point of interest, possibly on the 2 hours time frame, on the 4 hours time frame, you have to look at what that point of interest looks like on 24 hours time frame. I'm going to repeat that again. Anytime you are marking out your point of interest or areas where you are expecting to join the market, you must go back to your higher time frame to look at what it looks like on that higher time frame. So let's take, for instance, I am saying this as my break of structure to the downside, and I am looking at this eye as my inducement, and I am picking out this area for my point of interest. You can see market actually respected that area anyway. So if I am picking out this area as my point of interest, the next question I want to ask myself is, what does this POI look like on 24 hours time frame? This is going to help you because some points of interest are basically liquidity for the higher time frame. So let's go straight into it. This is 24 hours time frame. So this is our 24 hours time frame, okay? And one of the things you need to notice about this 24 hours time frame is that we have liquidity void. And after that liquidity void, we had this high created. This particular high was created, meaning that it is extremely possible for market to come back and take this high to fill up this void. If you did not check your higher time frame, you might enter this market blindly without a confirmation. Okay, so if you look at what it looks like on 24 hours time frame or your weekly time frame, it is going to really help you to avoid some certain entries that you make. So you can see that based on this 24 hours time frame, this point of interest that we mark out is a possible inducement for us. However, you can also see that we started having impulse. We had 1, 2 impulse before getting to this particular point of interest. That is enough confirmation to tell you that there is nothing you're looking forward to selling from this point of interest based on this impulse that we've had to the upside, and coupled with the fact that we had void above that particular high. Let's look at another asset, and I'm going to show you this same thing. So this is volatility, 101S. Let's check the 2 hours time frame. All right, you can see that we had this impulse to the downside. Market has been giving us series of lower highs, lower lows to the downside. And where we had last break of structure before market turned for this retracement was this low. We had this break of structure to the downside. Now, where you're going to be thinking of marking out your point of interest is this particular candle. And also for the fact that we had fair value gap. You can see that we had fair value gap there. So this would have been a possible area for you to say you want to continue the sell movement to the downside. But let's look at the 24 hours time frame and see what that looks like on 24 hours time frame. See what it looks like on 24 hours time frame. That was just a week. So you would not want to enter your continuation or your sell continuation from a week. And on this 24 hours time frame, where we had possibility of markets giving us a continuation to the downside, was this interest candle. This is an interest candle here. No other clear area where market can use for that sell continuation except for this interest candle. But if you check your 2 hours time frame, there were many areas where you would have looked forward to continue your sell movement. This is an instance. If I am making this analysis on the 2 hours time frame without checking the 24 hours time frame, I'm going to pick this out as a good point of interest for me for markets to continue that sell movement because this is a strong high. This particular high is a strong high, and you can see that market created this high as liquidity. We did not get to 50% of this range. So I would have been expecting market to come back and take this high and entered into this particular zone. But let's look at what that PO high looks like on 24 hours time frame. See what the PO high looks like on 24 hours time frame. It was just a week, which is a possible inducement for market to read. You can see that the PO high we were marking out on the 2 hours time frame were just possible inducement, were just possible liquidity that market would take on the higher time frame. And that is why it is essential that whatever point of interest you are marking out on your lower time frame, you have to correlate it with what exactly is happening on your higher time frame. Also, when you're marking out entry confirmation, you have to be sure that it is doing the same thing on higher time frame too. When you're marking out your break of structure, you have to be sure that your higher time frame has given you a real break of structure, because there is difference between break of structure and sweep of liquidity. You have to be sure that your higher time frame has given you that real break of structure before you proceed to making your analysis. That is how you do your time frame correlation. Whatever you do on lower time frame has to be in alignment with what is happening on your higher time frame. It is as simple as that. I'm going to see you guys in the next video. If you have a question, do not forget to drop it in the comments.